Hey, good morning, everyone. Welcome to the Friday edition, November 10th edition of the weekly update from Gimbal Financial. And, of course, for your safety, y'all know it's risky to be alive. However, I'll throw this out there. If you are doing what you're supposed to be doing, whatever that doing looks like for you, if you're doing what you're supposed to be doing, it is the least riskiest thing you could ever be involved in. And it may not look uh, like it's a safe place to your parents or to your kids or to ever who is judging you. But if you're doing what you're supposed to be doing, it is pretty much a risk-free trade. So I want to encourage you with that. This content, these are all ideas that Keith and I have dreamt up. And so we're very biased. We're very biased to what we think.
Hey,
We
Doug.
fought, yeah, yeah.
Yeah, if risk is an unknown expectation, life is a known expectation. You know the end game. And so the risky part is what you're going to do between now and then. And I think leaning into the unknown is really the safest thing to do.
I like it. Leaning in is a good word. Maybe you might want to play a game. Every time Keith and I say lean in on this broadcast, you got to take a shot of orange juice or whatever you're drinking right now. I like that word, Keith, or like that phrase. But hey, we're going to follow some indices. We always do. We like to talk about the S&P 500, the S&P 600, the Nasdaq. We'll probably even look at some more that aren't on this safety disclaimer. So, good morning, everyone. I'm coming at you live from Gimbal World headquarters in Carmel, Indiana, right off Range Line Road. It's Middle America. This is just a great place to be. And Keith, you're coming from where right now?
I'm coming from Pineville, North Carolina, which appears to be a bougie part of Charlotte to me. I stayed about, I think Ballantyne is the real bougie one, and I stayed over at a hotel over there last night. And I met with you all at this exact same location, probably in May when I was here.
That's pretty cool. Keith is on his way to go to a deal tomorrow with one of our friends, Mark Minervini. And Mark has been a big influence in our lives. Keith and I are grateful for him and his team who have really walked through several different types of market cycles over the years. Mark has written a few books that have been very encouraging to Keith and I. And so Keith is on his way to go do a little bit of a training and just say hi to some friends. And so, Keith, I'm really encouraged that you said yes. I wish I were with you. I really do. Had some cool family stuff I needed to stay back for. But in case you see on your screen this stock ticker, no, that's not a stock ticker symbol. That is a person's name. Libbi, and it looks like Libby is trying to connect to audio, but let's introduce Libby. Libby and I have been friends a long time, and Libby is also the daughter of clients, and she's super cool. She's right next to me. She's going to come over. Now, you won't be able to meet Libby, everyone.
Hey, Libby.
And Libby is part of the team. She joined the team 3 weeks ago. And Libby will be in Wednesday, Thursdays, and Fridays. And so if you're near the office or you want to call in and introduce yourself, that'd be awesome. We're happy to have Libby on board, and she will be making your life better with the details of your finances. So, Keith, you got anything to add about Libby?
I'm thrilled to have Libby as part of the team. I have not got as much time as you with her, but I've stayed intentionally out of the way so you guys can get acclimated. And I put it on her calendar, I think today to put on my calendar a regular time. But I'm thrilled to have her as part of our team.
I'm pretty stoked too. I'm really excited about 2024. I'm already thinking about it. Of course, I hope it's a great stock market year for all of yous and me. But yeah, our team is just we got a great team over here with Libby and Amanda and Phil. And so Let's get in. Let's talk a little bit about the stock market. But before I do, I just can't help but make a comment on that clock behind you, Keith. Tell us, sir, if you can zoom in on what the heck that clock says.
Well, I saw it when I sat down. How do I have it focused there? Can you see it?
Yep, I can see it.
It's a broken plate. It's been broken by a tennis ball. It,
McEnroe was here.
it's weird to think that probably the youngsters that are on this show don't even know what that means, right? Like I'm in Charlotte, and I brought Caleb here in May prior to his wedding, and we went to the Billy Graham Library, which is one of the top. If you Google what are the top things to do in Charlotte, that's one of the top things. However, I had to explain to Caleb who Billy Graham is, and so the idea that as you mature, the people that were iconic at one point in time are unknown to the younger versions, and so yeah, John McEnroe was known as a tennis guru with a bit of a temper. Probably the first volatile athlete that I can remember. I don't know if there was somebody more volatile earlier than him, but volatility is just ordinary now, I think, in athletics. But he was the one that I remember most originally doing that. And with regards to what we do, volatility and emotions work against you, and I
Uh,
assume it does in athletics, but maybe it worked for him.
yeah, no, he was known. He made himself known, and one of the secret weapons, I think, to healthy relationships, uh, lack of volatility maybe, is enjoying each other, being able to co-recreate in the same things or similar things. And Caroline and I had the chance this past week to learn to play pickleball. And I
Nice.
know several people are, I mean, it might be the fastest growing sport out there. Cornhole might be right behind it. I don't know. But I had always made fun of people who played pickleball and had jokes about them and all this stuff. No more. I'm with you. I pickleball is trending, and I want to get on that trend. Caroline and I had so much fun playing pickleball. But the point is, if there are things that you can co-recreate with your spouse, I want to encourage you to do it. And so let's shift here. Keith, let's shift screens and start talking about some markets. This that we're looking at, I've got a market check that I like to pull up and take a look at, and it's the same thing every day. I look at this first, and so this is the Dow Jones Industrial Average, and it's meaningful. 30 stocks, just 30 stocks, but these are like hand selected stocks, and they represent what's going on in the US economy and the US corporate landscape. And as you can see, our favorite lines are the black line, the 200-day moving average, the red line, which is the 50-day moving average. And on the Dow Jones, these two averages have been pretty much smooshed together here recently. And what we would like to see is we'd like to see the shorter term average start to tick up, and that would tell us that things are getting a little more healthy. Keep in mind, it's just 30 stocks, and as we go through this progression, you're going to see the variances. And so next on my list, Keith, do you have anything about the Dow Jones? I know it's one we don't really talk about a whole lot, but do you have any thoughts on the Dow Jones?
I believe, I could be wrong, that most people, when they ask what's the market doing, they think about the Dow Jones Industrial, because that's kind of probably what they grew up on. And believe it or not, if in fact all 30 of those stocks, which there was it was closer to 10 or 12, I think, when it was originally designed, but all 30 of the stocks, if they hadn't changed them over the years, the Dow Jones Industrial Average would probably be closer to zero, because many of the
Yeah.
original stocks are no longer in business. And so it's not a completely honest thing. It's honest in that it's a managed index, but it definitely, if it just stayed finite and didn't change, a lot of those companies would be gone. And why that's important is that if you own individual stocks and you've historically had good success with them, you may or may not always have good success with them, because even an index is actively managed. And usually they throw out the junk ones after they got hammered. Like General Motors went bankrupt, I think, in 2009. And sometime along the way there, they threw General Motors out so it wouldn't reflect on their performance. Otherwise, that component would have gone to zero.
Yeah, they are quietly asked to leave, and that's a good word, and it's true of every indice we look at. The Dow Jones is just an easier one to see because there's only 30. But here's a great picture, the S&P 500 index. This is the one that I think most people associate the market with who are in the markets today because of just the famous investors over at Vanguard. They really made the S&P 500 index a popular thing. And so if you look at the S&P 500, something that I like that I see here is we had three down legs. What's two, three. Okay. And we hit a low not too long ago. And then we've bounced off that low really within a week's time. And it's been looking healthy. We're above the 200-day moving average. We're flirting with the 50-day. But this has been just really encouraging to see. And keep in mind, the S&P 500 is heavily influenced by just a few stocks. And those few stocks have really propped it up over the last couple of days.
Hey, Doug, could you grab that kind of marking tool over in the middle of the screen that has the trash can and move it up just about an eighth of an inch or
Oh,
so? Just move that up so it's not over the volume. And
is that
then
it?
if you, yeah, perfect, right there. So now if you draw a line, a horizontal line across the last 7 or 8 days of volume over to the right, and then you compare that, if you look to the left and just focus your eyes, you see anything at all on the rest of the screen that looks remotely like the last week and a half?
Yeah, I mean, we had something kind of nice happening right here in the summertime, but it wasn't above average. And so
Yeah, that's what gives me excitement when you look at what's going on in the market right now. That component, and I think you can go a whole year and you won't see anything remotely like what we've had in the last week and a half.
yeah, it's very encouraging to see. And so Keith, let's take a look. While we're here, I just want to show this picture too. We'll zoom out our lens a little bit. Um, our industry loves to focus on annual returns, and we're judged by annual returns, and I get that. You got to have some kind of benchmark, but check this out, folks. If you just go back in the time machine to November, December 2001, we just still haven't hit those highs yet. And so by and large, this is brought to you by a decently paying money market or risk-free rate out there. And we're going to get into that in a minute. But since 2001, the end of 2001, the stock market, the S&P 500, the Dow Jones, the NASDAQ, it's just had competition. Whereas for a long time, it did not. Here's the NASDAQ picture. I'll go back to a daily. See all this blue down here? This is the volume that Keith was talking about. It's for some reason my pen is a little sensitive today, but a lot of blue. Whereas if you go back in time, trace my cursor to the left down at the bottom of the screen, you don't see a big block of blue like that. I had a few days back here in March, which were encouraging, and that began the rally of the summertime up through July. For many of you, that your statements in July were awesome, and then you've been calling me in September and October saying, "Hey man, what is going on with my account?" And right, hey, always call. But yeah, we hit the highs back in July, the end of July, and then it's been tough sledding ever since. Keith, you want to talk real quick about these markups you have noted here in the boxes?
Yeah, I do, Doug. And if you notice that red horizontal line over the volume that down at the bottom where you drew the line there, that red line is the average volume. And what was unique about this one and the S&P was above average over the volume, whereas the NASDAQ mostly on this rally has been below, which is okay. It's still a bunch of increased days. So if you look over to the left, Doug, back in October a year ago, I put follow through day, and then I put follow through day, and then I have bottom and follow through day on here. And a follow through day is generally the 5th through the 10th days after you have a low in the market, that big volume comes into the market, and the index will increase 1% or more on those big volume days. Big volume means greater volume than yesterday. Ideally, it would be above average. That would be a real good sign. Every bull market in history has started with a follow through day. Now, this is a math equation. Not every follow through day leads to a bull market. So we go on high alert when we have a follow through day. We don't necessarily start buying like crazy, but we'll try to do a buy for you all if there's a follow through day and it makes sense. And so the follow through day back in August there was not leading into a new bull market. It went to a lower low toward the end of September, and then we hit a lower low toward the end of October. And so we had that follow through day. I think it was last week that gave us encouragement to put some more money in the market for y'all.
Yeah, and since that time, what we try and do is we follow the money, and the money is the smartest investor in the room. And so we're looking for momentum. And right now, where we've been seeing momentum has been in really just one area of the stock market. I think we've talked about this before. When we talk about the S&P 500, it's made up of 11 different industry sleeves. And one of those industry sleeves has been just outright the strongest. And so that's an area where we've been trying to focus your resources right now. Hey,
I'd say
Keith,
there's two. Doug. The only way I know to show the other one is if you want to key in George, Boy, Tom, Charlie, and we're not recommending this. This is just where money. This is just where money has been flowing in a
it's
ridiculous
true.
way.
It is true. It is
Yeah,
true.
yeah. This has
And
gone up
safety
50%.
disclaimer, don't buy this.
Yeah, yeah.
Uh,
But
but
money has been coming into this, and
yes, you're
and it
right.
tends to attract speculation. So this is the only other place I've seen money flowing in the last few weeks.
Yep, yep.
It's Bitcoin for all of you at home.
Yep. And Bitcoin has many cousins, and I've been hearing about those cousins all week from a good friend of mine. Now,
Put that on
now
the monthly one. Put that on the monthly one so it can show the risk associated with it.
it
I mean, it
doesn't
had a
really.
nice run at the beginning, but it's been a yo-yo after the beginning. If
I
you didn't get on
mean,
that first couple years, then you've gone sideways with a lot of risk.
yeah, this chart doesn't reflect it as strongly as it could be, but a high of 38 and a low of $3.92.
That's a 90% drop. That's a lot of risk.
That is some, oh my goodness, stuff going on. I'm going to show one more, and apologize to all the viewers. This is the Russell 2000, not the 600. I changed my mind. I'll show the 600. I like the 2000 better, but oh shoot. Okay, here we go. To me, this is. I'll use the word disappointing. This is the one that I want to champion on. Why? Why do I want to champion this? Because it's the smaller ones. It's the companies that are emerging. It's the companies that are taking risk with innovation or just making an existing product or service better. And it has just been terrible. I mean, this looks there's nothing to like about this chart. And so if we look at it, it's just hasn't participated here recently like the S&P 500 or the NASDAQ has. And if I zoom out to a weekly version of this, basically it's just been in a continuous downtrend. And every dog will have its day. I mean, there will be a time where we're starting to look at this, and we look at it every day, but
Let's look at the monthly.
there will be a time where this will be attractive again. And but the time just hasn't been now.
Yeah, that monthly is real attractive, isn't it? Like, I mean, over time.
Oh yeah.
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 So at some point, it most likely, I mean, we can't guarantee anything. We'll resume a trend that's very similar there. And like
And so
probably the discouraging thing right now, and it doesn't have to be overly discouraging, but this is where the future technology is going to come from, are these companies, and the market doesn't want to pay anything for them right now.
yeah, and some of the sometimes you'll hear an argument, well, don't you want to buy something when it's low? Okay, well, what is low? You know, is this low? Is 1060 low? You know, what is low? Is 814 low? On this chart, it looks like 577 was pretty low, but the point being is when prices are above the 200-day moving average, it's a better trend, and it's just math. More people are getting in. Real
Hey,
quick,
Doug,
yep,
I was wanting to shift topics. You go ahead if you had something real quick you want to do.
yeah. Just quickly, I wanted to take a look and just show you guys where interest rates are. This will just be real brief, Keith, but we're still in an inverted yield curve, which means that the shorter term stuff is paying more than the longer term. And so on the short term, a 13-week treasury bill, it's at 5.2. And so that's a pretty good reward for your money here in the near term. This is reflected in your short-term CDs a year or so or
Can you
less.
show
Or
that chart on the daily? It's
oh
on
yeah,
the weekly.
yeah. Um, this is the week. It's been pretty consistent. This will reflect in your short-term stuff, 12-month CDs or less, or maybe even your money markets. And then if we go out longer, we'll just go out to a 10-year. Keith, we'll skip the 5. You can see that it's come off a little bit, and that's been good for stocks. And so this is the main competition for stocks right now, are these increased yield choices. Anything else to add there?
No, no. What I was wanting to talk about is last few weeks I've talked about ideas from different ages of my journey that I've learned, and this week I just had on my mind what I've learned about um, the contribution to and for veterans, since we're celebrating them tomorrow. Hopefully all you have somebody in your life that you can celebrate, and if you're a veteran that's joining us, we are thankful for you. But one of the things I learned probably just a decade ago, that the, there are veterans benefits for ailing veterans, and if you've got somebody that's struggling with some physical things and you're not familiar with those, there's consultants out there that can help them.
Yeah, we've got a great connection to introduce you to if you're one of those veterans and you're aging and you're just not able to take care of yourself like you used to be, or your loved one's not able to take care of themselves like they used to be. There are some really good choices out there, and by no means am I an expert or Keith, but we do know the people we can introduce you to.
Right, and it's pretty substantial. And so if you're overwhelmed by some ailing health of a loved one, don't let that burden weigh you down, particularly for somebody that has served our country, because there's a number of benefits available to help out with that. I'd say the other thing I was thinking about is just the contributions of our veterans. You know, I don't know if you were in the room when our friend was in the other day, and I asked him when he smoked his first cigarette, and it was just mind-boggling to me. Did you hear what he said?
No.
Or no, when he had, I didn't ask him when he smoked his, I said, when did you have your first cigarette? And you weren't in the room when I asked him.
I don't think I was there.
Yeah,
No.
and this will bring a little tear to your eye. He said, I didn't smoke my first cigarette. He said, my first cigarette I had in Vietnam, and I used it to get the leeches off of me. And
Mm.
I have no idea what our veterans friends have endured, but that was a pretty clear picture to me that a great big thank you is worthy to all of them, no matter whether they serve stateside or in combat or just in some other place across the globe. They have served us with honor, and we're grateful for that. And a special shout out, the anchor this month, we highlighted our friend Ben, where we've seen I think some divine intervention and healing in his life in a way that just makes me smile when I think about him.
Yeah, Ben was one of Gimbal Financial's greatest interns. Maybe we need to have plaques of great interns, at the office. But Ben was a great
I'd
intern.
even, I would say he was an employee.
Well, we do like to say he was our free employee until compliance made us fire him. How do you like that? Your legal team makes you fire, no, not the legal team. The the compliance union made us fire a free employee who was a veteran, daggone it. Oh,
I
oh well.
forgot that's why he left us. That makes sense
Yes.
now.
Yes, that was a
Yeah.
really awkward conversation.
Yeah. Hey, Ben, it's not you, it's us.
No, it's not even us, Ben. It's them.
Right. Right.
I'm
That's
throwing
what you always
them.
want to do. You always want to blame somebody else, and this time it was legit. Yeah. I
Well,
I man, I almost get a tear in my eye and seeing the healing that's come across in his life. And I believe there's healing for veterans that struggle with a lot of things in between their ears. And if you
yeah,
know somebody that is, you can be a message of hope. If you want some insight on it, things that we've learned, we're happy to share those as well. But man, what a great country we get to live in, and the sacrifices that have been delivered for us are unbelievable. I don't even think we'll ever know. That whole leech story just rocked my brain.
well, we're going to end on that today. That is a high note. That is a
Yeah.
high note. Hey, thanks everybody who's tuned in today, or if you're tuning in during the week, thanks for doing that too. We'll look forward to catching you next week.
All right. You guys take care.
Bye.